Hey everybody, I'm going to talk to you about a loan right now that has been a big buzz word for about the last 7 or 8 years. And anybody who's trying to buy real estate as an investment, rental property, investment property, multifamily, has heard this acronym DSCR. It's all over the media. And I just want to break it down for a few minutes to really help you understand what it is, what are the advantages of it, who it can help. The acronym DSCR stands for Debt Service Coverage Ratio. What does that mean? Well, traditionally, if you go buy a home, whether it's a primary residence or a rental property, the lender's going to look at your W-2, they're going to look at your tax returns, they're going to look at your income to see if you have enough income to qualify, to justify the expense of the loan. Well, the debt service coverage ratio, DSCR loan, is a little bit different. They don't look at your income. They don't look at your tax returns. They don't look at your pay stubs. The only thing they care about is how much rent the property is generating compared to what the monthly expense is. This loan is only for investment properties. You cannot use it for a primary residence. You cannot use it for a vacation home. It's only if you're buying a piece of property that you're ultimately going to rent out as an investment. So I'll give you a quick example. If the total monthly housing expense is $3,000 between mortgage, property taxes, and insurance, if the projected rent that you can collect on that property is $3,000, you can get a loan. You can actually get a loan if it's a little bit less than the $3,000. And it's easy to get a loan if the projected rent is greater than the monthly expense. But the only thing the lender cares about is how much rent it's going to collect compared to the payment. Let me tell you who this loan is ideal for. It's ideal for anyone looking to buy a real estate property that's going to be an investment, whether it's a condo, a single family, or units. It doesn't matter. It's ideal for anyone looking to do that. There's some great advantages to these type of loans. Again, I talked about it briefly. They don't look at your income, your W-2, your tax returns. It doesn't matter. It doesn't even appear on the loan application. They don't care how much money you make. They care about your credit score. They care about that you have the down payment, but they do not look at your income. One of the other advantages of this type of loan is they offer interest-only payments. Why would you want that? Well, talk to anybody that owns real estate. Cash flow is king. You never know when you're going to have an unexpected water heater break, or there's going to be a leak in the roof, or your tenant leaves and you're in between tenants, and for 2 months you got to cover the mortgage payment still. An interest-only loan could be advantageous because it keeps your monthly required expenses a little bit lower. You can always pay more if you want to, but it's not required. And so that really does give you a little bit of an advantage in what you're trying to accomplish for buying homes like this. Now, there's one really important thing I want you to remember about these types of loans. The flexible qualifying gives you a real advantage over someone else trying to buy a home. If you're trying to buy this home as a rental property and you don't have to show any income, your loan's going to be a little bit easier than maybe your competitor who's trying to buy that home as a primary residence. And the seller knows that. They are aware that you're absolutely going to be a little bit easier loan. Now, here's what's really important about this type of loan when you're talking to your real estate agent. If you're looking at buying a home with this type of DSCR loan, not only do you have to look at what the price of the home is, but you absolutely have to get your realtor to tell you what the projected rents are going to be. There's a way your real estate agent can go and find out what that type of home or units or multifamily property is or what it would rent for. If I know how much the sales price is, and I know how much down payment you have, and I know what the projected rents are, I can get you approved for a loan to buy a home. But it's critical that you do that prior to making an offer. Because if you go make an offer on a home and find out later that maybe in that area rents are lower, the lender may not want to give you a loan. So it's very important that you get approved beforehand. What's the most important thing to take away from a DSCR loan? We don't care about your income. It's not even on the loan application. We care about how much rent you're collecting compared to what the total monthly expense is on that property. And the advantages are endless. Interest only, easier to qualify for, and they just make it really simple. If you're looking to buy an investment property, whether it's your first one or your 10th one, or you have any questions about maybe refinancing one of your existing properties, please reach out to me anytime. Thanks.